Hello, WorkTech. Welcome back for another quarterly look back, a review of the global HR technology investment from Q1 2022. Some folks are still coming in. We'll give it a second before I launch into everything. There's always a lot to talk about. This quarter is no exception. I want to thank everyone for giving me your time today. I know how valuable it is, and with everything going on in the world, I'm really grateful that you're here and grateful for the ongoing support of WorkTech that we get in the market. All right, looks like we're getting there. I'm going to go ahead and start launching into everything. First off, as you know, I'm George LaRocque, the founder of WorkTech. There are a couple of sides to what WorkTech does. First, we're an advisory and analyst firm focused on work technology. We track all of the growth capital that is coming into the space, work with employers and tech providers to help each other understand the other side of the HR and work technology equation. We view work tech through an independent lens and track all of the trends, all of the developments happening with technology providers of all sizes, and all of the trends in the market with employers of all sizes. And we look at this independently. I think it's an important point because as you look at sources of data, I'm always looking for, do they have a dog in the hunt, right? What are they trying to accomplish with this data? And you might find some advertising agencies or consulting firms tracking data that goes beyond the world of work and HR technology. And that might be to drive more revenue for them beyond this category. That's not the case here. We're strictly focused on work tech and HR technology. Or it may be that someone is really narrowly focused on one category in HR technology or work technology and omits a category, say job board marketplaces or learning. We think that's short-sighted, and we really look at the entire market, and you'll see how we're extending our lexicon and the categories and subcategories that we track so that this makes sense for buyers, investors, and tech providers. So the other side, I mentioned a couple of sides. The other side of the business is the Accelerator that was launched last year. We had our first cohort launch out into the marketplace. It was the first go, but it was wildly successful. Got a lot of really positive feedback from the mentors, investors, and the cohort. A couple of new things. The next cohort will launch. Well, it's April 1st today. So this quarter, calendar Q2 2022, we're finalizing the selection. There's still a little bit of time. If you're aware of an early stage startup who needs some guidance going to market, send them our way. At the same time, some announcements to make. Our app launched at the end of the cohort. So now we're really tightly integrated with our alumni, with our mentors, and with new cohorts that will continue to come on. We're excited about that. Even more exciting, we have launched an investment syndicate. So we will be taking our cohort participants to accredited investors at the end of the cohort. And at the same time, we will be taking non-cohort participants through WorkTech, where we're working with early stage providers and helping them source investment. And we'll be leveraging the syndicate for one-off deals like that as well. So really excited about that. And there are announcements coming out about that, and we'll continue to tell you in the market about what's happening with the Accelerator. Okay, that's enough of the commercials. Let's get into this quarter's results. So jaw-dropping again, right? Every quarter for the last couple of years has just been amazing. The Q1 2022, no exception. Just under 5 billion, 4.82 billion in VC came into the space across 134 deals. This chart shows quarterly performance going back to 2017, which is where WorkTech built its process. And over the years, we've invested in technology and AI, and now we've got a human managing all of that and updating the data as well. Talk a little bit more about that in a moment. But this, quite a chart, right? We had a spike in deal volume, but again, this quarter was super impressive, and I've been, given pause several times with the pandemic to just looking at the performance of this category through the pandemic. And then with everything happening in Ukraine right now and with the economy, you expect there to be a little bit of a lag from the point where the Ukraine situation has been going on for just over a month. Any deals in process were well underway prior to a month ago, but nothing is slowing down. Funds are continuing to be raised, and then those funds are going to market looking for a home for investment, and this category continues to attract investors. So it's a little surreal when I sit back and where you'd expect a tapping of the brakes. In this category so far, the last couple of years has been momentary. So how does this quarter really look if we look back over the last few years? I feel like I'm a broken record. Q1 was quite a year. Q1 wasn't our biggest quarter ever. That happened last year in 2021. But as you can see, given that we're just one quarter into it, we are well on our way to on the pace that we were at last year. Will things slow down? Will there be economic turns? Given the experience we've had so far, I think only fools would try to predict this. But it seems with all of the challenges in retention of employees, finding and hiring and engaging employees, and all of the shifts and transformation happening in work, this doesn't seem to be slowing down. But this is one of my favorite charts because it really puts things in perspective. When we did 5 billion in 2019, we thought that was an incredible year. And look at us now through a pandemic and a conflict in a war in Europe. So why is this happening? And I think there's nothing new here, but just to reinforce, while capital isn't as cheap as it was 6 months ago at this time, it's still readily available. And, again, things have not been slowing down in this space. So money's available, not as expensive as it was 5 years ago. So terms are available that benefit founders even today. We've had more than a decade's growth. Again, somebody said this in the market: COVID is not a creator. It certainly accelerated a lot of things, and it drew our attention to some areas, some problems that needed to be solved. And we've seen a lot of products of the pandemic come out, as well as uptake and adoption of existing products, existing approaches that were gaining momentum and then just shot through the roof given everything happening in the market. There are a lot of factors beyond COVID that I would put under, societal factors, employee experience, mission-driven and ESG investment, and so forth. These are all bringing attention to this space. If you think about some of the biggest challenges that have happened in the last few years, the pandemic not being the least of it. HR is right at the center, right in the spotlight. So, a decade ago, people used to lament about, HR or the CHRO getting their deserved place at the table. That's we're well past that now, and I think HR would like to have maybe a dimming of the spotlight, just for a moment. But that's where we are. It's HR is getting its due. WorkTech in this category is certainly getting its due from an investment perspective. It's also a really big market, right? This market is in the 10 countries that we track it across, it's about 400 billion now. Another big update, we're in the process of updating our total addressable market data across what will end up being more than 15 countries. Countries that we get requests from clients, advisory clients a lot include China, includes some South American, Central American, and Asia countries to add to the list, and that's all happening. And the taxonomy is being updated. We track the TAM. We track that across several categories, and now we're breaking it down to a fairly finite, even more finite, granular view across what you might look at as the overall employee experience. So I think we'll have the best source for total available market, serviceable available market, period. And the kind of analysis that you only get with someone who's in this space and understands where the categories fit and how players overlap. We're also initiating a new market share view to this. So we'll be looking at adoption and market share where the data is available and where we can make some reasonable assessments of that. So stay tuned for this. The best way to get access to this as it launches in the next 60 days is to make sure that you're on the Market Insider email subscription, because we'll be putting it out there, and of course following us on Twitter and LinkedIn and so forth. Okay, so let's keep the conversation going. So what were the categories? How did it fall across the categories? I mentioned we're breaking things down in a new way. You'll notice WorkTech is now a category in and of itself. So what does that mean? How does that get carved out? Well, we shifted from HR to WorkTech, meaning the company and the brand, over a year ago, as we could see really what used to be an aspirational goal of HR being the business of getting work done, really started to deliver on that promise with the emergence of employee experience and sort of talent management and employee experience sort of falling into each other over the last couple of years. And so we also have seen through the pandemic a number of tools that will run in a subcategory that cuts across. So something like, scheduling, or think about hot desking in the hybrid work environment. If tools like that have a tie into the traditional employee experience, so in the case of hot desking, like shift scheduling, workforce management, engagement, then we consider it a part of WorkTech. We're still very work focused. We don't throw generic tools that are used at work. So a new financial tool, or let's say a sales enablement tool. These things can get a little blurry, and we bring an eye that dissects sort of what belongs in these categories and what doesn't. But the shift this quarter was for HCM to jump well into the lead at about 2.2 billion. Now, I always say this, looking at VC investment in a category, a quarter does not necessarily a trend make, but this was a pretty significant shift. Whereas learning was leading the last couple of quarters, they had some massive investment rounds that were really pumping the talent management category up. But you can see all of the core. There's been a renaissance around some of the core HR subcategories, and we'll get into that in a moment. One of the things that should jump out at you here is while looking at average deal sizes. So this is pretty consistent, right? Talent acquisition tends to attract a smaller average deal size than the other categories. And you can see that in HCM and certainly WorkTech with just less than 20 deals and 1.2 billion in investment. But this is pretty consistent with what we've seen over the last 5 or 6 years. Okay, so let's keep it going into the subcategories. So payroll was led by Globalization Partners, Employment Hero, and Omnipresent. And these, most of these players, 2 of the 3, I'm not sure about Employment Hero, but Globalization and Omnipresent are in the global payroll business. And in particular, in the employee of record side of things. So as the world was flat before the pandemic, this is not a new model, but through the pandemic, the idea of remote working, a distributed workforce, and then with the challenges associated with growth today, needing to lean on a distributed workforce given the job market, employers are interested in hiring talent wherever they are if it fits the role. That brings in a great deal of complexity around tax compliance, pay compliance, et cetera. You think about crossing, even in the US, you could cross county borders, cities, states, and then if you think globally in Europe, crossing country borders, there's a huge trend through the pandemic, probably impacted Europe more than the US, of folks going to where they're from and working remotely from there. And we're just starting to see employers really address the compliance issues that are associated with that. And it goes beyond tax compliance, but it gets into pay equity. So if you were, there was a story that one employer told me about a engineer that was working in a Paris office and then moved to a different country. It was a European country, but wages were much lower for these roles in that country. But this person brought that large salary with them and then just completely threw off the equity for folks working out of that region. How do you deal with that? How do you manage that? Solutions that are dealing with global payroll bring a lot of that insight and bring that to the table. Now, this isn't slowing down. Remote, I was just looking today, announced another massive round, which will be reported in Q2, and they're in the global payroll world. Now, again, this isn't something new. In the US, we have the PEO, right? These companies, professional employer organization, become the employer of record and assume a lot of the compliance risk for the employer. It's a co-employment situation, and that is generally the employee of record approach as well. So I expect to see more happening in payroll this year. It's been a hot category, and there's certainly a lot of room to innovate, a lot of room to bring new approaches with APIs and blockchain and Web3. I think we're nowhere near finished transforming the world of payroll, and I'm excited to track that. The next category, and you'd see a lot of these players if you, as you get access to the report and if you have access to the database, it is in collaboration and communications, which most of these players will fall in the WorkTech category, although some may be in benefits and in talent management or core HR as well. But no surprise to anybody struggling with a distributed workforce or a pressured frontline workforce, non-desk workforce, that communication and collaboration continues to be an attractive or hot subcategory. Job boards continued to bounce back. If any subcategory took a hit through the pandemic, it was the marketplace job board category, which typically over the last 7 years is the top category for HR technology investment. It remains, on a quarter-to-quarter basis in the top 3 or 4. And, we're seeing increased investment and, most importantly, innovation and new models coming into this area. So I'm not, we don't limit the marketplace job board categories to traditional sort of, post and time-based job ads. We do include really innovative models that are bringing learning and training and focuses on diversity, inclusion, equity, et cetera. And this is a category that continues to lead from a specialization and innovation space. And I expect to see some big moves in this subcategory as we go on through this year. Benefits, core HR, and learning also made the list of the top 6. And as we look at how these subcategories performed last year, you'll see some consistency with what's in the top 5 or 6, or even if we look year to year in the top 10. The reason I want to go back and look at 2021, again, a quarter is not necessarily a trend when it comes to VC investment. It does show, it can be a little predictive as to what's coming. But if you look at last year and think about what was going on in the world, this is pre what's happening in the Ukraine, and this was a year that was a total of 17.9 billion, the biggest year ever. I don't know if we'll have a year like that again. We seem like we might this year. You look at these subcategories, no surprises to anybody who is in the space or has been watching the space at all. And please feel free to drop your questions into the question tab, as I'm keeping an eye on time here, and I want to make sure that I take questions toward the end. We always share the top 25 deals. People like to see what the biggest deals were and what categories they're in. It really, the biggest deals were spread across all of the categories and subcategories. It's a pretty good disbursement across HCM, WorkTech, talent management, talent acquisition, and then the subcategories as well. The biggest deal this quarter was Miro in collaboration and comms. And then you can see payroll and benefits coming up into the top 3. Other notable deals, again, globalization partners in global payroll. Handshake is a marketplace connecting new students and interns into opportunities, and they've had a lot of success with their ability to provide a more diverse workforce as well. And then you can see payroll and core HR beyond that on the list. So that's sort of what the top 25 look like. It's not all about the biggest deals. We did have about 126 million in early stage investments. These investments were 33 deals with 32 early stage investors. So Rally Ventures led 2 early stage deals this past quarter. And in this case, we're looking at early stage as pre-seed and seed. If we included A rounds, the list would get a lot longer. But we're really focused on pre-seed and seed for the earliest of stages. You'll see Acadian Ventures on the list, Jason Corsello, who's been an operator in the industry for quite some time and also participates in our Impact WorkTech Accelerator. And you might recognize some other names here as well. Y Combinator is a name of note, Sequoia. And as we look at the investors leading the biggest deals in our space, you will find companies like Andreessen Horowitz, SoftBank, Benchmark, just Excel Partners. We've got really a long list of investors that have been focusing on HR technology and the future of work. And it includes those sort of brand names from Sand Hill Road. It also includes institutional investors we had last year, the Canadian Teachers Pension Fund participated in a big round with Beamery, and a lot of angels, a lot of smaller shops. So it really runs the gamut, and as suggested by the amount of deal flow coming into the space. Okay, so we talked about the categories and subcategories and investors. How about those valuations? It is just crazy. Just this category has been really, I would say, prior to about 5 or 6 years ago, it was sort of overlooked. And so to see companies in this category, this is not a typo, a $17.5 billion valuation, or, the $3.5 billion at Handshake. It blows my mind. And it's on one hand, calls attention to the excitement and the fervor right around this category. On the other hand, it's a reason to pause. Because I'm not talking about specifically any of the players on this chart, but overall in the market beyond WorkTech, there's a lot of buzz about a reckoning coming, right? So as the economy, nobody predicts that the economy is tanking, right? But the economy is tightening up. Companies have been raising a ton of capital with massive valuations, and the growth that would need to be demonstrated in that environment might not be happening for some of these players that we've seen enter the market in the last year or two. And this is where some are predicting layoffs, which startups scale-ups, they lay people off. It's part of the deal, but we're in a world where we haven't seen that in a while. So it's something to keep your eye on, something for us to watch. We'll certainly be watching it, and we'll be covering it. If you're one of our advisory clients, it might be a place to find some good talent, right? And I just think there is a reckoning coming overall, and I would be paying attention to, for the tech providers here, if you're going up against some of these, are they starting to show up in fewer deals, or what are you seeing for real adoption and real momentum and not just hype? So that's my story on valuations. It's pretty consistent, and I'm sticking to it. But let's continue the conversation here. So again, a quarter doesn't a trend make. Some people would tell me, oh, a year doesn't a trend make. So let's look at it from 2017 through to today. And it's pretty consistent with what we've talked about. HCM is always the top category. Talent acquisition used to be more neck and neck, and now it's fallen behind in the last couple of years. The introduction of WorkTech, we have not gone back and updated the data to go back to 2017, but this WorkTech showing up here is largely because we just started tracking it that way. But we will be going back and updating this. So keep an eye on our reports and keep an eye on these webinars, because we'll be giving you updates here on an ongoing basis about how these numbers shift based on the new categories that we're tracking against. All right, so then, let's step back and look at it for the last decade. And again, this is just the orange on this end of the chart are numbers before we were tracking it, and these are third-party numbers. The blue, and I apologize, the quarter just ended yesterday and we need to change these colors to blue, but the blue would be the WorkTech data that we, our process, our AI, and now Max, our data person, is validating and updating. And the difference between 2017 and 2018, that's where more technology got involved in the process for us. That's also where the sources went from like 20 different sources to, I don't know, 40 or 50, and we're now over 100 sources that we're looking at to track this data. So yeah, that's the picture for the last decade. And again, another view that just shows how big this quarter was in relative to what's going on in the world and the years that we've had before. I'm going to close out with pointing to some new things that are coming. So we do have someone focused on the data working, such a relief for me, working with me on this now. And we have a new version of the HRTech VC database coming. The existing version is live, up to date, up to the minute. As of today, all of these numbers are reflected there. If you're a data access subscriber or an advisory client, you have access to the Microsoft Power BI interface that we've published to track all of the happenings going back to January of 2017. But we are rolling out a new version of this. It will not be leveraging the Power BI database or tool. It will be presented within the browser with even more filtering and just an easier interface. We will have a free version and then the subscription version available. And we're going to our advisory clients now and offering access to this to participate as we sort of build in public. We'll have V1 out there, or sort of, I'm not big on MVP, but it's probably better than an MVP, sort of V1 to this new interface. And we're looking for some folks that would be interested in participating in that process, which just means jumping on a call every 2 to 3 weeks for about a quarter and giving us some feedback and maybe some insights into what other views of the data or data access would be helpful for you. Along with this, because the data has been updated, because the data has been cleansed and brought into a new system, we've got some really interesting views, some things that we've already added, like valuations. 5 years ago, we weren't seeing crazy valuations. It was interesting from a funding perspective, but we're capturing that and keeping that up to the minute. We're also capturing founder diversity. So we'll be coming out with a report very soon about the last 2 years of startups coming into the space and where we have diverse founders. And so a lot of folks have asked for that. So we want to deliver that to the market along with that bigger view. There may be some other questions that you have or other insights that you'd like to see. Please subscribe to the newsletter to see when this launches. If you want to participate in this program, this partner program, just hit me up with an email or Twitter or whatever, and we can chat about it. And along with that, another new, something else that's new here is our HRTech book vendor directory is now going through the same purge, the same cleansing, and we've got a lot of new features that will be rolling into HRTech book and integrating the overall vendor directory into WorkTech. So just really excited about taking all of this data access and information to the next level. And if you're interested in participating in that, getting access to it, helping us model it for you, again, reach out and we'll make sure that you know where to go. That being said, I think that's about it. I'm going to pull up the questions here. So one of the questions that came in, I get this a lot, I should probably just start making a slide over it, is about market consolidation, given the amount of M&A activity that we've seen. I would say this, again, my take on market consolidation. When you're looking at market share, which for a tech provider at any given moment in time is important, you're going to see, you know, 2 or 3 clear market leaders that are generally going to have, you know, 8 to 15% of the market. If you have anything more than 15%, you're usually a dominant market leader. Something that we're going to be looking at, as I mentioned, with the new TAM recast in this next 60 days. It's important, but I would say that vendors consolidate, not markets. So what I mean by that is I heard something from the CEO of Slack once, and he introduced this thinking, and I'm right on board with him, that every time a major acquisition happens and someone is taken off of the market or out of the market or merged into another entity, a bunch of startups flow in and fill that void. And that has happened on steroids in our space since 1999. That has been the case. The market has continued to expand. It's not just about the vendors in the market, it's about further adoption within market segments. So prior to 2013, payroll was like the leading HR tech solution used by the SMB. Now we've got, you know, SMB, mid-market, and enterprise players all competing for talent, the same talent, no matter what type of talent it is, whether they're competing on the front line locally or in the, you know, sort of knowledge worker universe globally. And these tools are being adopted because it's about competition, right? I need to be paying equitably, whether I have 1,000 employees or 100,000 employees. I need tools, I need data, I need help in order to do that. I need to be sourcing and recruiting, whether I have 500 employees or 500,000 employees. So this is, these are things that have expanded our market along with the pure number of solutions that come into the market. And now as we look at how the future of work is changing, I don't see the market shrinking. Our numbers are certainly going up. And we use a cloud-based sort of PEPM, price per employee per month, 12-month contract value approach, because everybody's in the cloud, everybody's SaaS now. And these numbers are, there are new categories that we're tracking, new categories that are commanding higher 12-month contract values. And this is something where just, you know, be careful not to get confused by the market and the vendors or the market share leaders, if you will. But yeah, we've seen a bunch of stuff happen, right? Just this past week, iCIMS announced the acquisition of Candidate ID. You can see an interview with both parties here at WorkTech on that. Also, Claro was acquired by Wilson HCG. And again, another interview here live on the site for you to learn more about those deals. Those are both in talent acquisition. And I think we're certainly going to see more M&A activity within that category, as well as all categories here as we move forward. The other thing that I would say is that most of the engagements on the advisory side today are looking at M&A activity. There are a lot of vendors getting ready to get very acquisitive as you think about what's happening in the market. And as you know, just pending a cycle end on the economy, whether that's in a year or 2 or 5 years, but I think you're going to see a lot of acquisitions happening, and what that's going to do is make room for a lot more innovators to come in, and targeted applications, what we used to call point solutions, filling that void. Okay, so that's my rant on market consolidation. And I've got time to keep us on time for one last question. Here's a nice, quick, and easy one. It's about the report. So yeah, we're able, because we track this data. That's about the timing of the report, excuse me. When is it available? We track this data real time, and with the team, I can say, and the technology that we have, this stuff is updated. So we're able to come out on April 1st and talk to you about Q1. The report will go live later today. So we won't be hiding it. You'll be able to find it at WorkTech, and there'll be a lot more detail for you there. And again, if you've subscribed for access to the database, you can get even more detail and more perspective. And if you're curious about what's in the database or what perspective it can bring to you as a buyer or as a tech provider, just reach out, and we're happy to talk about that. So thanks everyone for being here again. Really appreciate your time. I know how busy everyone is, and with everything that's going on right now, I'm truly grateful that you were here for this. And we'll get the recording up later today as well. Thanks all.